Mr. Speaker, allow me to highlight tax policy measures proposed in the Finance Bill 2024. I will begin with the proposed amendments to the Income Tax Act, followed by Value-Added Tax, Excise Duty Act, Tax Procedures Act, and Miscellaneous Fees and Levies. Mr. Speaker, let me start with amendments to the Income Tax Act. Currently, retirement benefits, Mr. Speaker, are subjected to tax. This taxation ceases at the age of 65 years. In order to support the retired employees, I propose to amend the Income Tax Act to exempt all retirement benefits paid from the Registered Pension Fund, Registered Provident Fund, Registered Individual Retirement Fund, and National Social Security Fund and the Public Pension Scheme upon attainment of the retirement age. Mr. Speaker, for the individuals who take up early retirement, this exemption will only apply if the individual has contributed to the pension scheme for a period of 20 years from the date of registration as a member. Mr. Speaker, in addition, the annual limit of pension contribution that is exempt from tax is 30% of the individual income, or Kenya shillings 240,000, whichever is lower. Considering that this limit has not been revised since 2005, and to encourage savings for social security after retirement, I propose to increase this limit to 360,000 shillings per annum. Further, Mr. Speaker, I propose to allow deduction contribution to a post-retirement medical fund subject to a limit of Kenya shillings 10,000 per month. This will promote savings for post-retirement healthcare needs. Mr. Speaker, currently the threshold above which withholding tax applies on payments for management fees, professional fees, training fees, and contractual fees is Kenya shillings 24,000 per month. I propose to amend the Income Tax Act to remove this threshold since it creates a room for tax planning and is a challenge to tax administration. Mr. Speaker, despite the Income Tax Act providing a corporate tax rate of 30%, some taxpayers pay tax at an effective rate of less than 15%. This is due to vigorous tax planning and tax incentives provided under the Act. To prevent this practice, I propose to amend Income Tax Act to introduce a minimum top-up tax payable by a multinational group with a consolidated annual turnover of Euro 750 million, whose effective corporate tax rate is below 15%. Mr. Speaker, the spectrum of license fees paid by telecommunication operators are currently not tax deductible, creating unfairness in the tax system. In this regard, I propose to amend the Income Tax Act to allow telecommunications network operators to deduct the spectrum licenses fees over a period of 10 years. Mr. Speaker, advance pricing agreements have emerged as a valuable tool for preventing tax disputes related to transfer pricing of cross-border transactions. In this regard, I propose to empower the Commissioner to enter into advance pricing agreement with taxpayers engaged in transactions with related entities. Mr. Speaker, to attract international financial investors in Kenya and reinforce Kenya's position as the regional financial hub, I propose to reduce the rate of capital gains tax from 15% to 5% for firms certified by the Nairobi International Financial Center of Origin. Mr. Speaker, a transfer of property between an individual and an entity where the individual holds 100% shareholding does not constitute a gain. In this respect, I propose to exclude from capital gains tax this kind of transfer. Mr. Speaker, the Digital Services Tax was introduced to prevent tax-based erosion occasioned by migration of traditional businesses from physical shops to online platform that is not feasible by the Commissioner of Tax for tax purposes. It has been noted that the design of the tax does not capture all taxpayers, leading not only to loss of revenue but also to unfairness in taxation. For this reason, and in line with international best practice, I propose to amend the Income Tax Act to replace the Digital Service Tax with the significant economic presence tax. Mr. Speaker, to expand the tax base and make our country self-reliant, I propose to introduce an annual motor vehicle tax at the rate of 2.5%, the value of the vehicle, subject to minimum amount of Kenya shillings 5,000. Mr. Speaker, let me now turn to gains. There are substantial gains for Kenyans. Mr. Speaker, currently the tax-free amount on subsistence allowance paid to employees in the private sector for a period spent outside the usual place of work while on official duties is capped at Kenya shillings 2,000 per day. This is quite low considering the inflation that has occurred over the years. To cushion employees in the private sector from high cost of living, I propose to review the threshold to an amount not exceeding 5% of the employee's monthly gross earnings. Second, Mr. Speaker, the affordable housing levy and pay as you earn are calculated from the same base, leading to double taxation. To address this, I propose to make the housing levy deductible expense. This means that there is a tax savings for Kenyans and therefore affording Kenyans more money in the pocket. Mr. Speaker, in order to encourage Kenyans to continue constructing their own houses, I propose to increase the limit of interest payments that qualify for mortgage relief from Kenya shillings 300,000 to Kenya shillings 360,000 per annum. Let me turn now, Mr. Speaker, to amendments to the value-added tax. Mr. Speaker, I will now highlight the amendments of the value-added tax. Mr. Speaker, currently the registration of VAT is a requirement for a person who makes taxable supplies of Kenya shillings 5 million or more. This threshold was last reviewed in 2007. In recognition to the effect of inflation over the years and to enhance efficiency in tax administration, I propose to increase the threshold to Kenya shillings 8 million. Mr. Speaker, the VAT Act allows taxpayers making both taxable and exempt supplies to claim input tax where the proportion of exempt supplies is less than 10%. This has led to tax planning and hence loss of government revenue. To address this, I have proposed the removal of the threshold so that only the input tax relating to taxable supplies are deductible. Mr. Speaker, in support of the government's effort to combat malaria, I propose to remove VAT on mosquito repellents and raw materials used in the manufacture of repellents. This will encourage local production of the repellents. Mr. Speaker, tax expenditure was estimated at 393.6 billion, or about 2.9% of GDP for the year 2022. Of this amount, VAT tax expenditure amounted to 248.3 billion, or what is 63.1% of the total estimate of tax expenditure, which is a large erosion of the VAT tax base. Mr. Speaker, tax expenditure creates avenues for revenue leakage and thus denying government the revenue to support key priorities that benefit majority of Kenyans, of the citizens in Kenya. Recognizing the importance of tax expenditure in the promotion of investment and addressing welfare challenges in the economy, and in line with the medium-term revenue strategy, I propose to rationalize the VAT tax expenditure as provided for in the VAT Act in form of exemptions and zero rating based on the following criteria. First, that goods currently exempt be subjected to VAT. Second, zero-rated finished goods and consumer goods and services be exempt from VAT. Third, zero rating be restricted to goods and taxable services meant for export. Based on the above, Mr. Speaker, based on the above criteria, Mr. Speaker, I have proposed several amendments to the first schedule of the VAT Act in order to move some goods and services from exempt to VAT status. In addition, I have also proposed amendments to the second schedule of the VAT Act so that we can move some of the goods and services from zero rating to either exempt status or VATable. This rationalization is expected to expand the VAT tax base and create fairness in taxation. Let me turn now to amendments in the Excise Duty Act. Mr. Speaker, The tax measures I have proposed under excise duty. I propose to change as follows. I propose to change the due date of payment of excise duty on alcoholic beverages from 24 hours to within 5 working days after removal from the stockroom. The 24 hours time frame has posed administrative challenges and cash flow, as well as cash flow challenges to the taxpayers. Mr. Speaker, to protect local assemblies and create fairness and equity in taxation, I propose an introduction of excise duty on imported, fully built motorcycle at the rate of 10% of the customs value, in addition to specific tax duty rate of Kenya shillings 12,952.83 cents per unit, whichever is higher. Mr. Speaker, participation in betting, gaming, prize competition, lotteries continues to affect socio-economic fabric of our society, given their addictive nature. Mr. Speaker, last year we raised the excise duty on these activities from 7.5% to 12.5% to discourage participation. Despite this increase, participation rate in these activities by Kenyan citizens, especially school-going children and young adults, continues to persist. To further discourage this behavior, I propose to increase the excise duty tax rates to 20%. Mr. Speaker, in line with research findings commissioned by the National Treasury on the taxation of alcoholic beverages, I propose to review the excise duty structure on wines and beer from specific rates per litre to the rate of Kenya shillings 22 shillings and 50 cents per centiliter of pure alcohol. In other words, we want to start taxing alcohol beverages on the basis of alcohol content. Further, I propose to change excise duty rate on spirits from specific rates per litre to Kenya shilling 16 per centiliter of pure alcohol. This new structure of taxation based on alcoholic content does not distort the markets, and does not affect the investment decision, and it is expected to encourage responsible consumption behavior of these alcoholic beverages. Mr. Speaker, I also propose to review excise duty structure on cigarettes in line with research conducted and advice that has recommended harmonization of excise duty rates for cigarettes with and without filters at the rate of Kenya shillings 4,100 per mille. This will reduce the incentive for misdeclaration and illicit trade. Mr. Speaker, I propose to increase the excise duty rate from Kenya shillings 1,594.50 cents per kilogram to Kenya shillings 2,000 per kilogram on products containing nicotine or nicotine substitute to address their adverse effects on human health. This excludes those approved medicinal products. Additionally, I propose to increase the excise duty rate on liquid nicotine for electronic cigarettes from Kenya shillings 70 per milliliter to Kenya shillings 100 per milliliter. Mr. Speaker, to provide fair treatment to both residents and non-residents offering excisable services, I propose to amend the Excise Duty Act to charge excisable services offered in Kenya by non-resident through a digital platform. Mr. Speaker, the Finance Act introduced excise duty on fees charged on advertisement of alcoholic beverages, betting, gaming, lotteries, and prize competition on TVs, print media, billboards, and FM stations. This resulted to a shift in choice of advertisement platform from the traditional media to internet and social media. To create a level playing field and to achieve the intended purpose, I propose to expand the scope of this tax to include fees charged on internet and social media advertisements. Mr. Speaker, in order to enhance the administrative efficiency in the issuance of excise licenses to persons dealing with excisable goods or services, I have proposed an amendment to provide for issuance of licenses within 14 working days upon receipt of all required valid documents by the Commission. Mr. Speaker, the Finance Act 2023 introduced duty on imported eggs, potatoes, onions at the rate of 25%. To promote trade across East African region, I propose the removal of this excise duty on imported eggs, potatoes, and onions originating from East African Community Partner States, subject to goods meeting the East African Community Rules of Origin. Mr. Speaker, currently, excise duty is 15% on the following: telephone, internet data services, fees charged on money transfer services by banks, fees charged on money transfer by agencies and other financial services providers, and the fees charged on cellular phone service providers. I propose to retain the excise duty rate of 15% on fees charged on money transfer services by cellular phone service providers to benefit retail electronic payments ecosystem. Let me now move to amendments to Tax Procedures Act. Mr. Speaker, I will now highlight those proposed amendments of the Tax Procedures Act. Currently, there is no validity period for the agency notices issued for enforcement of correction of unpaid taxes. This gap often leads to tax disputes and delayed revenue correction. To address this, I propose to amend the Tax Procedures Act to provide 1 year validity period for agency notices. Mr. Speaker, in order to align the timelines for claiming VAT and in the Tax Procedures Act and VAT Act, I propose to delete the reference on timeliness for claiming refunds at the VAT Act, so that the applicable timeline is the 6 months that is provided under the Tax Procedures Act. Mr. Speaker, currently registered manufacturers whose value of investments is in the preceding year, in the preceding 3 years is at least 3 million, are exempted from withholding tax. In order to promote equity and create fairness to all manufacturers, I propose to amend the Tax Procedures Act to remove this exemption. Mr. Speaker, I propose to amend the Tax Procedures Act to clarify that enforcement and correction of taxes will be undertaken where a decision of the tribunal or court is in favor of the commissioner, and stay orders have not been obtained against the decision. Mr. Speaker, the 60 days provided to the commissioner in the Tax Procedures Act to review documents submitted by the taxpayers in support of an objection of tax assessment by the commissioner are not adequate. To ensure comprehensive review and in order to give the commissioner adequate time, I propose to extend the timelines to object decisions of the commissioner from 60 days to 90 days. Let me now move to amendments to miscellaneous fees and levies. Mr.